All right, hello, welcome everyone. Doug here with thelincolnlist.com. I want to welcome you to another edition of Stock Market Mutterings. This is for the week that begins on the 6th of July. As always, this is where I'll do my best to take a grope in the murkiness, try to make some sense out of this market for you guys, and I hope in the end it results in putting in a little bit of money in your pocket. As always, if you need help with your personal trading, take a moment, visit the link that appears somewhere on the screen, and you can trade with us live here every day. Now, I do hope you guys enjoyed your holiday, even if you're not American. You at least took advantage of the extra day that the market was closed and you either studied or you just rested, because resting is cool, which is exactly what I'm doing right now. Because as most of you know, I talked about it last week, I just got done hiking Mount Whitney, which is like the largest mountain in the lower 48s. And you know, the thing is, like, when you get older, you don't lose so much of your athletic ability like I thought when I was younger. The problem, as most of you older folks know, it's the recovery time, isn't it? It's the time it takes you to recover. So, like, if I'd have done this in my 20s, I would have come home like on Sunday. I'm cool. I'd have been fine like on Monday. In your 30s, it's like maybe you feel a little droggy on Tuesday, but then you feel better. You move into your 40s, it's like hump day. It takes you half a week. Now that I'm like in my 50s, man, it takes a whole damn week. It takes a whole week to recover. I was just feeling flat. Thank God my trading wasn't flat, but I felt personally, physically flat. It takes so long to recover from stuff like that. Imagine if I'm fortunate enough to live another decade. It's going to take me a month. Oh my gosh, the recovery time is horrible. So I want to go back and I want to talk about the stocks that we were talking about, the market that we were talking about. And it kind of set up. I'll tell you what, it set up the way that we were talking about. To be honest with you, we really mentioned here, I'm going to show you the chart down below. I think most of you already have it. But I felt that, the start of the week was what was really important because we were sitting right there. We finished the week in prior. We finished Thursday and Friday with a sell-off. Looked pretty weak going into the close there, definitely on Friday. Not this Friday, the previous Friday. And it laid right there at that emotional $300 level. Plus, it was really close to the 200 moving average. And if you remember last week in the Mutterings, I said, what happens on Monday morning is probably going to give us a signal to where we're going to end up later in the week. If we were strong, we were able to hold the moving average there, the 200 moving average, we would probably rally a little bit. If not, then maybe we were in for a little bit more pain. So scenario one played out. If you take a closer look here at the chart, played out, hit the 200-day moving average, and just from there, it was a nice linear run up. In fact, by the time the week was over on Thursday there it closed, right back up at that resistance level. I can expand this a little bit. I mean, like almost technically perfect right up into that 315 and some change area that goes on the 16th. So, and then of course from Thursday early in the morning we had a nice little spike there and it just kind of sold. So anyway, the week for us trading was good. It was a really good week. That's kind of what I thought was going to happen. And when you're on par with the market and your theory and thesis plays out in the market, then good things happen. Now, where we go forward, we saw a lot of selling, obviously, on Thursday, and that's not uncommon when you're really kind of thinking about 3-day weekends, news with coronavirus overhanging, all kinds of, I don't know what the right word, let's say unrest in the country, divisiveness, that kind of stuff. There's always, it's not a political statement, but there's always things like that could have an impact on the market by the time Monday opens. And when you're giving it an extra day, you never know, man. You just never know. And we saw some pretty heavy rejection there. So here's what I think going forward. I think you'd be nice to digest this level. If the market is able to shrug this off and everybody just buys back what they sold on Friday, then if you clear this 315, I just don't see anything in its way taking us back to 323. If you remember, that's when this whole kind of mess started, this little gap down. We've kind of been fighting around with for the last couple of weeks. I mean, really, when you block out the noise, the market's just consolidating here. It has not given up the 200-day moving average. It's held that really well. And that short term is still bullish. And I think if you clear that with authority, with volume, with consistency, then there isn't really anything to stop it until you get up. It's going to be the same song played out over and over again, and you're going to continue to see this thing fight its way up. Now, if we do sell, I still feel that this 200-day moving average for right now is the line in the sand. It's continuing to hold that, and it's doing a good job of holding that. So one thing you guys have to learn as traders, if you don't know, you're learning this technical analysis thing, is you got to block out the noise sometimes. You're going to go through periods of volatility where the market intraday throws out false signals. It's really good at that. It's really good at throwing off the scent and getting people to kind of go one way, then it switches the other. This is what it does for a living. And I think you get these periods where you end the week before looking like, oh gosh, we're really selling off. The Fed wasn't that good. Coronavirus is expanding to where it just bounces off the 200 moving average. And before the week is over, everybody completely forgot. So kind of watch those. Qs still lead the way, obviously, here. I mean, it just looks like this thing's just never going to stop. It's like everything tech. Everything tech is just getting swallowed whole, which makes sense. When you're in an environment now where people are not working physically in an office, like they were. You have unemployed people, high unemployment right now, and tech continues to, people are doing more work at home things. So things like Docu, where you have, or ZM, work at home themed businesses, people staying at home watching Netflix, that theme is still solid. I think you're going to still continue to see that because I don't see anything improving on that front. We keep getting more cases, so I don't think we're going to get this mass push back to work, but who knows? Who knows what was, you trade it day by day. That's all you can do. Okay, so I think that's the scenario moving forward. Now, when we look at individual stocks, this week's kind of tough to put these things together because, like I mentioned, Docu, wow. I'm going to be the first to say these charts are high. These charts are high. So when I say that, I mean from my trading strategy and my perspective, if you guys are following for the first time, you don't know, or you're just wondering, there's two types. You have investments or swing trades, momentum trades, whatever you want to call them. And then you have day trades. Day trading is a lot different because some of the things that apply to investing and swing trading and holding overnight do not apply during the day. And applying during the day, you might be talking about a scenario of 50 cents to $1 or something relatively small versus exposing yourself to overnight risk. So when you're looking at a stock like Docu, if you're investing in this for the long term, this might not be the best place to invest, especially when this thing was just clicking off $60 a few months ago. You're kind of late, if you know what I'm saying. Doesn't mean it won't go higher, but you're really late. And initiating a new position here as it almost crested 200, no, not the best place probably for your money where you have max value. Because in the event that things turn around, it's probably going to be a very fast and abrupt correction. I still like these because no matter how high these types of stocks get with this, with ZM, with the market itself, with things like TWLO, they're not just going to go straight down. The dips normally get bought on these and they provide great opportunities. So if you see pullbacks on these like we have been in our trade room, we mainly play Docu, ZM, TWLO. Right now, if these things are pulling back and allowing you the luxury of an entry, then take it. Take it because it usually makes for great scalping. When I say scalping, I'm talking about seconds, but I'm talking about, hours. So you're going to see this thing bounce. And we brought that up last week with Facebook. You're going to get these opportunities where a news event or something comes by, washes it down, and allows an entry, allows you to get back in at a better price. So, in my opinion, I think that's what I look for every day in my trades. Just when I'm day trading, if I'm swing trading or investing, I'm looking at something a little bit different. Now, there is one I want to put back on there for a little closer watch, and that is Lulu here. I like these when you get a nice fade in the stock for a little while. It's just statistically due for a bounce. So you got a nice fade here. You got to pop above the 20 moving average. And now you're kind of just consolidating and holding here on its own. Now, if it's able to hold up in this area, roughly into this gap, I would expect, I've already drawn it out here, for this thing to kind of re-gear back upwards towards this 324. And that's barring any sort of smaller, shorter term correction in the marketplace. I think we're a little bit vulnerable for that. You saw with the SPY, you printed a nice reversal candle on the daily, but we know the SPY, right? It's been tricky. It's fooled the best of them. So I kind of like this one. I want to look at this one long, establishing some price inside of that gap. I mentioned things like, anytime Docu pulls back, you could put low in that category. And I'm just mentioning the ones that I'm looking at. I know you guys are going to type a bunch of stuff down in the comment section about what about this stock? What about this stock? I mean, we're truly in this era. I'm not going to go down here. QLYS that I mentioned. Just about everything on my list, like TTD, Shop, Spot, Docu, Amazon, TDoc, Bobi, ACOM, QDOW, Twillo, Teen, NVIDIA, ZM, CHGG, SPY, TER, MSFT, PayC, UPro, QLYS, Roku, Okta, Splunk, SPLK, Lulu, Facebook, Wayfair. The list goes on. This has simply been one of the most vicious snapback rallies ever. And I think most of you might have read the statistic that this quarter closing was the most bullish quarter since like the 1980s. That's how damn bullish it was. And there comes a time every so often where the market just gives you guys a gift for all your pain and suffering. It just says, here, I'm going to make it a little easier on you. Don't be so damn stubborn and fight the trend. But I think what we're going to enter now going into this quarter here is maybe not so cut and dry. You're going to see a little bit more volatility. You're going to see a little bit more rapid washouts, not predicting a crash, but I think you're going to see a lot more rapid washouts in some of these things. So kind of going into tomorrow, everything stays the same. I'm still leaning more to the bullish side. I think it's going to be a little more challenging this week, possibly, than it was last week. It was a little easier to read. The setup was a little bit better. And when you see those, you need to be more aggressive with your approach and your position sizing. But I would welcome a pullback at this point, too. I would think some of these, like the Apples, the Facebooks, the Googles, Netflix, Amazons, TDocs, TTD, Shop, Spots, all those names, if they could just pull down a little bit, I think you could welcome some selling to allow the opportunity to get back in and get some more alpha and get some more push to the upside. You could also put WDay in that list. So my strategy basically here is just letting the market settle in Monday, see if it can build some levels around some of those nearer term moving averages, settle in, and maybe later in the week just kind of grind itself out. But we'll see. We'll see. Now, always keep in mind, we're still close to that 200-day moving average. And going forward, or at least in the near term future, we need to pay close attention to that. Because anytime that gets lost, you might see an extra wave of aggression here. Okay? I'm not saying that's going to happen, but any single day that could happen, that becomes a possibility. Because you're so close, you need to prepare for both scenarios. So anyway, guys, I hope I made some sense out of this. And I hope I can make this market a little easier for you to trade. If you need help, as always, visit the link that was on the screen. Look forward to trading with you guys. Until next week, trade them well.